We are here for the next edition of our Multifamily Investor Nation Summit Speaker Introduction Series. And with us today is Ryan McKenna with McKenna Capital. Ryan, welcome to this series.
Thanks, Dan. I'm excited to be here.
Well, I want you to kind of get us started and share with us a little about you and your background and why you love multifamily so much.
Great. Well, I was first introduced to, multifamily syndication back in 2002, actually when I was playing baseball at Arizona State University. A teammate of mine, his father was a multifamily syndicator, and he'd always be coming into town to, watch his son play baseball, but he'd be looking at, these large apartment complexes in Arizona. And, I got to talking with him one day and just really learned a little bit about the business and what he was doing, how lucrative it was. And then, he also shared with me just what a syndication was. So how they were pooling together a bunch of investors to buy all these apartment complexes. And I just thought that was really cool. And he kind of became like a mentor to me over the years. And I just told myself, I want to do that someday. That's pretty neat. And also at the same time, I came across Rich Dad, Poor Dad. And that book was, it's been like a blueprint for me as far as being an investor, business owner, and, just really about, building up assets and finding deals that, that cash flow. And so after kind of, seeing so much of this go on, even while I was in college, I guess if I fast forward to 2006, that's when I made my first investment, kind of dipped the toe in the water like most do with a single family rental. And it was a way for me to really learn, I guess, the property management business, learn what it's like to deal with tenants, also learn what I don't like to do. And, after probably a few single family rentals, I just knew in order to scale this business, I had to, get back to the, multifamily, syndicated deals. And so I reached back out to my mentor and, did my first 5 deals with him as a passive equity investor. And really was learning the business inside and out. And then I continued to do more passive equity deals with other syndicators just because I wanted to get a good sense for what was out there, the different markets, and just build out my experience and learn as much as I could because, I had every intention at some point of syndicating my own deals. And I guess if I look back, 2 years ago, I started McKenna Capital, and along the way, I had friends and family that were interested in what I was doing. They, said, hey, whenever you get an opportunity, keep me in the loop, let me know. And the deals I was doing early on, I just really didn't have any other opportunity to bring others along. And so that was kind of the impetus for doing McKenna Capital and trying to find our own deals. And then as I was building that out, I had an opportunity that came my way to bring in equity into others' deals. And that was something that was new to me. I'd always been interested in raising capital, but to bring in and partner with other operators out there who have a successful track record and great deal flow, for me, it was a perfect match in someone who has a pretty big network and had a following of people that were interested. And so kind of hit the ground running with the capital raising business and absolutely love it. It's been a way to get me more involved in deals, but also to bring in investors to this great asset class. And, as it sits today, I'm an investor in over 25 commercial real estate syndicated deals. We had a great year at McKenna Capital last year, and what is basically the first year of capital raising for our business. So we did 12 deals, 9 value add multifamily, 2 self-storage, and 1 manufactured home park fund. And we're sitting right now at just over 5,000 units and a portfolio value of about $500 million.
That's exciting, and I'm looking forward to talking with you a little bit more at the event too, and hearing your session. What's going to be the topic that you're going to be speaking on at the event?
So I'm speaking on raising private capital,
which I think that fits very well with what you did in 2018.
Yeah, no, it's great, and I've learned a lot from others, and I'm going to be sharing what has worked for me. I've gotten a lot of feedback from my investors after, having hundreds of conversations just around, the type of deals they're interested in, the style of communication, just talking about building out your brand and creating awareness and a thought leadership platform. One of the things that I think is there's so much potential out there. I mean, there's so many people that don't even know these types of deals exist. And then, the benefit, everyone that gets into real estate, wants to build and grow their wealth and have that passive income stream. And I just haven't found a better vehicle out there than the real estate syndicated deals. So just as far as, helping educate others and, where to find investors, those are some of the things that I'm going to be sharing, and just some of the tips and things I've learned over, my investing years, but also most recently in the capital raising role.
And as far as this event's concerned, why do you feel like people that are listening right now should attend an event like this?
I mean, I look at it and say, why not? I mean, you put together a phenomenal lineup of speakers. I mean, there's 55 or 60. It's basically the who's who of the multifamily investing world. And, me as someone who loves to, learn and just continuously try to kind of build and grow, I'm excited just to see all the other speakers. And as an investor out there, I mean, they're going to just be able to hear and learn from so many other experienced real estate investors. And the beauty of the setup and the virtual aspect of it is very unique. You have the ability to go back and watch videos over and over again. And I think that part is pretty cool, because when you go to a conference, you're able to probably pick and choose who you want to listen to. And you kind of pick up a nugget or two. But with this format and style, I mean, you're able to go back and rewatch videos, which I think is very important, because some people learn better that way. Maybe they want to see something 2 or 3 times. And I think just kind of have that library at their disposal is very valuable. But then just the ability to connect and network. And, this business is all about partnerships, and the fact that you're going to be able to connect all of us through the emails. It's a great opportunity to follow up even after the event with others and just connect. And, this is a teamwork type business, and we're all, kind of in this together. And so I think there'll be a lot of great partnerships that will be formed. And I think everyone is going to be really, excited to be part of this. And I know you're giving out a no risk guarantee, 100% money back if you're not happy. And I don't know who would want to, pass that up for the value that you're putting together with this deal. So I'm really excited that you're doing this. And again, I'm lucky and happy to be part of it.
Well, it's one of those things that, I wanted to make sure that there was nothing holding somebody back from being able to take the plunge and, making the investment in themselves and actually being in a part of this event. Because let's just say their fear is that they spend, right now it's $349, and I'm going to have you give out your promo code so they can get another $100 off of that. So it'll be $249 right now. But, the risk of losing $249 on an event that they show up for, and it's just a terrible event, which, throw out there that the 100% money back guarantee. If you don't like the event for whatever reason afterwards, you just send me an email and I'll give you a refund. But I guarantee you that you will love this event. You will learn so much from it. It only takes one golden nugget to change you. So, Ryan, what is that promo code that they can use to be able to get that discount from that $100 off?
It's McKenna. So McKenna.
Just so when you're going to the MFINsummit.com page and you put in your email to go to the checkout page, there'll be a place there for you to put in your promo code. So put in McKenna, McKenna, and you'll get $100 off your ticket. Ryan, thank you so much for being with us here today. I wish you the very best.
Well, we have quite an experienced panel then today when we're talking about raising private capital and what that means for your deals. So I have a list of questions here, and we're just going to start and go in this order. So I'm going to start with you, Ryan. We're going to go in the same order that I had you introduce yourselves, and the question is going to be the same for each of you. So we've already gone over your background and kind of what you're doing and what kind of money you've raised to date. But Ryan, what do you think is the most important foundational thing required to begin raising capital?
So I would say for me, a lot of it just starts with a belief in yourself and the right mindset that you truly believe what you're doing is going to help others, that you're going to be providing value. And I think, I wouldn't want to be sharing something I was doing with others if I didn't truly believe that this was going to be, a great fit for them or something that they could benefit from. So I would say philosophically, it starts with your mind and a great belief system, confidence. But then more tactically, I would say, we all have really strong relationships. We know how important those are, but it's more about the process. And this isn't something when you're first going out and making the introduction to, a deal. You want to start way in advance with compiling a list of people that might have interest. And that's essentially, what I did. And I kind of, over the years, they knew that I was out investing, and again, didn't have opportunities to really bring them in, but I wanted them to know that, look, I sat down, had, calls, coffees, and, really kind of, anticipated having some opportunities. And so when I did, I really had kind of a list built out of who was interested, and we kind of just hit the ground running. So I would say, foundationally, it's, you're leveraging your relationships, the trust that you've built over the years, but you also want to have a solid process in place. And I think it starts with kind of identifying who in your network would have interest, and then just getting ahead of ahead of things. So when that opportunity does come, they're aware of what you're doing, and they can make a quicker decision when you bring them an opportunity.
Okay. All right. Excellent. And all right, that's excellent advice from everybody on the panel. And I hope everybody's taking notes so far. And so we want to keep moving with all this great wisdom and knowledge from this experienced panel. And I'm going to flip back to you, Ryan, and ask our next question. That's going to be, how do you manage your investor relations, such as CRM systems and frequency of contact, et cetera?
So the main, CRM system I use is MailChimp. It's what I use to put together all of our announcements when we have an upcoming opportunity. It's our monthly newsletters, our quarterly updates, when someone's in a deal, we'll send out a monthly update. It'll come from our distribution list for that particular deal in MailChimp. So it's an easy way to create some templates and then to kind of organize the investors, organize the people that are on your distribution list. And so it's really a streamline things. It's very easy to get information in front of investors that way. I also do the old traditional email as well. If I want a little bit more personal touch, I will send a direct email kind of in conjunction with some of the MailChimp stuff. But I would say, MailChimp is probably the best system I've seen out there as far as doing what I'm doing, and it's allowed me to leverage a lot of my time and reach a lot of people very quickly.
And how often do you like to reach out to people using that system?
So there's a fine line of too much contact and just enough. So I guess it's a great question for all my investors, but I would say I like to keep people in the loop. I like to let people know what's going on, but I also don't want to be sending out too much information that, it's flooding their inbox. And so I really try, when I make an announcement or send something out, I want it to be of value. I want it to be something that's important. I don't want to just send, blast an email out just to blast an email. So usually there's a purpose for it. And so I do try to be very selective in how often. So I would say on any particular deal I do, there might be several emails that go out, but mainly it's the deal announcement, and then a lot of our deals have filled up very quickly. So maybe it's hey, the deal's oversubscribed, we're taking backup. That might be like a second email, and then hey, maybe a spot opened up, might be a third email, or maybe there's a new piece of information about that particular deal that I want to get out, like a webinar that's coming up. But there's maybe 4 or 5 touches throughout any one particular deal. And then once I get commitments, there'll be more touches with those individual investors for that particular deal. And I leave everyone else off because I don't want them to just get, random emails about a deal that maybe they're not interested in. So that's kind of the cadence I work with. But in general, I'm touching all of my investors, once a month with a monthly newsletter that just kind of summarizes what we're doing and maybe some deals that are on the horizon and some deals that are closing soon. So I think that's, a good, effective, way to touch and to be purposeful about, when you reach out.
And let me just follow up with a secondary question. And I know the answer to it, but I want you to state it and kind of be thinking this, other panelists. What is there a difference in frequency of contact between potential investors and investors that are return investors?
Yeah, I would say the return investors, they kind of understand the process. They know, kind of the next steps. So definitely there's more interaction, more communication with a new investor. And that it might also involve, calls. I mean, I'm always happy to jump on a call to, help walk through something. I've tried to be, purposeful with, laying out the steps ahead of time and anticipating those questions. So they know what it's like to invest in a deal. They know the steps involved. They know the timing, because a lot of investors get excited about the first deal. And then, on our end, we're kind of waiting for more information to come out sometimes. And so there's that period where it can go quiet after initial commitment. And so I just try to let them know, like, look, you're in a good spot. There's nothing, that you need to do right now. I'll be in touch as soon as we have kind of that next piece of information. So definitely with newer investors, there is more touch points. And then once, an investor's done a deal, it's usually pretty seamless after that, unless there's questions about the particular deal. But that's been my experience.
Okay, excellent. Thanks. So let's go on to our next question. I'm going to skip the next one. I like this one a little bit better. Ryan, we're going to start with you again. In your opinion, do you need to own money or have your own money to invest in deals before you begin to raise capital? In other words, does your net worth need to be to the point where you're seeking peer investors? Oh, I got you muted there.
I'm muted.
Yeah, there you go.
Good now. Okay. So I would say for me personally, I do believe it's important to, put your money into these deals as well. It shows investor alignment. Again, it goes back to that belief. If I believe in the deal and I want to share it with other people in my network, I just think it's important to show them that you've got skin in the game and that you're along for the ride as well. And I look at this as a team sport, and I always tell my investors that, hey, we're all in this together. We're all growing together, and it's kind of fun when you can do that and participate in the deal. So I really do think it's important to put your money into these opportunities, because it shows a level of seriousness. It shows that you've done your due diligence and that you're just as excited about the opportunity and to get your capital to work as well.
How do you feel that plays into, like, when you're trying to meet investors? How do you go about what areas are you looking for investors in? Like, when I say like your own money, or like, let's say, for example, like, I don't have any money in my checking account, but I want you to invest in my deal because I'm so good with money, that sort of thing. So how does that kind of play into, like, what circles you run in and those sort of things?
So, I mean, I guess the circles I run in, I think, is important, especially kind of identifying, the type of investors that you want to work with, because at the end of the day, this is a relationship business. So, I tend to kind of gravitate towards people that I think are like-minded, that, want to do similar things. And I just kind of always viewed myself as an entrepreneur. So I naturally gravitate to, business owners. And for me, it's about, creating additional streams of income. And if you're a busy working professional, or you have a business and you can only dedicate so much time to, real estate investing, these vehicles are great for that. And one area I'll mention that I've had some success just connecting with investors is the angel investing world. I'm part of Irish Angels. It's a affiliate of Notre Dame. And I've connected with a ton of angel investors who don't necessarily know about the structure of our deals. And I find it very compelling to kind of just share, because I do some angel investing as well. And that's a structure where you've got your capital tied up for many years, 7-8 years, and there's no cash flow. And there's a high likelihood that the deal might fail early on. And so to kind of introduce them to the type of investing that we do with the syndication business, whether that's multifamily, self-storage, mobile home parks, I mean, from a diversification standpoint, they get it right away because they're investors, and they're looking to, kind of, I guess, mitigate some of the risk. And so I've seen a lot from those circles who also, want to participate. And again, they're investors kind of by trade with what they're doing. And so most people I'm reaching out to, I mean, have some sort of capital, have invested before. I would say they're pretty sophisticated. But at the end of the day, if they like the people that they're working with, I know Dave mentioned that as well, they're having a good experience. I mean, let's face it, there's a lot of deals out there, and they could probably go anywhere to kind of get access to the deal. But I think if you provide a great experience and they want to work with you, and you're very responsive and trustworthy, I think you're going to over time develop some great relationships, and people are going to keep coming back to you, and they're going to start telling others about what you're doing. And that's how, the business, I think, really grows. And I'm starting to see a lot of that now, where, people are coming to the website, people are sharing, our deal flow with others. And, I think that's great, just a great sign that, you're kind of on the right path. And so,
Ryan,
yeah.
What do your investors look for as the most important thing in a deal? Is it IRR? Is it cash on cash? What are your specific investor group looking for in a deal? What's the most important metric?
Well, I mean, numbers are great. I think, it's also the relationship with that operating partner, who they are as a person, their track record, because, anyone can put good numbers out there, but you also got to know that it's a solid relationship, that, I personally know who I'm working with and who they're investing in. So I think it starts there. And I always tell investors, all of our deals, they're all within probably 1% or 2%, just return wise, and just pick a different market. And so at the end of the day, I mean, they're like Brian said, the relationship is very important. The reputation is very important. But yeah, all the deals are, 7-8% preferred, 16 to 20% IRR, and different market, different syndicators. So I think again, that's kind of the range. And I always just share with investors, diversify. Don't ever try to put all your money into one particular deal. I just spread it out. And with our model, we do have a lot of good deal flow because we've got a lot of great partnerships. And I think it's a great way for investors to, again, spread out their risk amongst many deals, and with operating partners who we vetted, who we trust, who we believe in, who we formed long-term partnerships with. So I would say it's kind of a combination of all those things. And at the end of the day, I mean, the numbers are what they are, but I would say there's no one particular deal where we're like, oh, this is an absolute home run. You got to put everything you can into it. I mean, they're all pretty consistent. We're trying to hit doubles and triples, and the investors have been pretty happy with that deal flow.
We're going to ask each panelist what's one piece of advice you would give anyone getting started with raising capital. So we're going to limit this. We got 5 minutes left, so let's limit this to a minute each. All right. And Ryan, let's give it to you.
So I would like to echo some of those comments that Vina and Ellie shared. I would say, yeah, pick the right partners, surround yourself with people that are more experienced. That's how you're going to learn. It's how you'll, reduce that learning curve. It'll get you off to a great start. And Dave Thompson and I, we've done a lot of deals together. I've learned a lot from him. He's my mentor, and it's been a great working relationship. And I just think that there's so much potential in this business, and there's a lot of opportunity out there. So for me, I would say I get a lot of, first-time capital raisers, or people just, interested in how to kind of overcome that initial conversation. And what I say is, when I'm sitting down with an investor, what I'm thinking is that, back of my mind, I'm just sharing an opportunity with someone that I care about, or someone that I think would have interest in knowing. Because the number one thing I hear from all investors is like, God, why didn't I know about these types of deals 20 years ago? I mean, imagine what my net worth would be had I started investing in these types of deals. And it's just like light bulb went off. I'm like, all right, I'm on a mission now. My goal is to spread the word about real estate syndications, and just kind of the benefits, the value, and just, so I get really excited. And at the end of the day, when I'm talking to an investor, I'm not nervous about like sharing the opportunity. It's never about selling. It's just about educating. It's about building relationships. So I really get, excited when I do that. And I tell myself, look, if someone else were to approach me with an opportunity, I hope they would at least think of me as someone that they'd want to talk to about this. And so that's kind of my mindset when I talk to someone else. It's just about being collaborative and sharing, and we're all kind of in this together. And like I said before, it's a team sport.
Excellent. But thanks again, and everybody have a good rest of the day. Oh, there's Dan.
Hey, Dan.
Hi, Dan.
Thanks, Brandon. Thanks, Dan. Thanks, Dan.